Up today is going to make us all feel better. We've been talking about these red numbers all day long, and that's Oliver Slope. He's with Blue Line Futures as a vice president there up in Chicago. All right, have at it, see what you can do, but it's been a pretty dismal day.
Yeah, there's not really a whole lot of positive spin you can put on these markets, as it's starting to just kind of feel like Groundhog Day, day after day, where we come in and see the market continue to bleed lower, and we haven't gotten that peak panic and capitulation that you want to see for a near-term bottom. This bleed lower generally leads to lower prices until you get that panic squeeze. Now, looking at the volatility, we are starting to see the volatility in the corn market pick up a little bit, but it's far from panic. One thing I'm keeping a very close eye on, not just throughout this week, but into next week's trade, is March options expiration. There are a lot of in-the-money puts right with where prices are right now. So it'll be interesting if that plays a role in price action next week. But for the time being, the path of least resistance has been and continues to be lower, as the funds just really don't have any reason to get out of shorts. And I hear a lot of people talking about how heavily short the funds are, and that being a bullish catalyst. Yes, it can be, but there needs to be more to the picture than just funds being aggressively short. There's nothing right here, right now, that is signaling that they should exit those, and so they're going to keep pushing the pedal to the metal until that time comes.
And what people do forget, and I get reminded every so often by some other analysts, is that yeah, there might be short 300,000 contracts or whatever it may be, but there's a long out there too, and that's the farmer, and that's a big long, and that long is bigger than that short, right? And so we get a rally, it will be met with some selling. Now, I think that's part of the reason why these funds act like they're so comfortable being short, because they know there probably will be some corn for sale on the way up. What do you think about that?
Absolutely. The farmers have a multiple net long position relative to the shorts net short position. And I think the funds right now are also, they're skating to where the puck is going, not where it is, right? They're looking forward to this crop that we're going to put in the ground here in the next couple of months. And they're looking at the potential for 93 million acres. Now, I know the Outlook Forum this morning came in with a number less than that, but guys I've been talking to, 92, 93 million acres, you get a trend line yield, and that does not help the balance sheet at all. So I think you're seeing the funds pile into short positions ahead of the spring. Potentially we get some sort of weather scare that prompts a little bit of short covering. But as you've mentioned, I think that's going to be met with producer selling on the way up.
Yeah, you can see futures rally 50 cents. I mean, maybe not even 50, but say they rally 50 cents. I wouldn't be surprised to see cash lag at 30 cents higher,
Yeah, absolutely. And that would be a gift. But I think it's important to remember, if we do get those prices, be proactive, have some working orders, have a plan of action in place beforehand, because I know a lot of people say that psychologically, and then we get there and there's no action taken.
Exactly
so
right. Good
set a plan.
That's called good till near, that old order. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope from Blue Line Futures in Chicago about livestock after this. All right, it's about livestock. I'll give you the floor. Have at it. What looks interesting to you?
Well, it certainly looks a lot more friendly than what we were looking at in the grain market, so there's a positive spin there. Lean hogs have been the leader over the last couple of days. We had just a blowout export sales number this morning, 72,000 metric tons. I believe that was up about 82% from the prior week, so I think some of that may have been baked into the cake. Going into that report, you're not seeing a whole lot of follow through, especially in that April contract today, but we're right back at the top end of the range, and the chart still looks relatively friendly. Now on the cattle side, higher today as well, which is nice to see, but I think this is just a little bit of reprieve from the sell-off that we saw in the previous 3 sessions. Now, the cash market has firmed up. We've seen the 5-area average come in between 180, 181 this week, which is certainly encouraging. The April board still at a nice premium to that, so I wouldn't be surprised to see this market maybe settle down and come into a little bit of a range here in the very near term. We're going to continue to keep a close eye on some of the outside markets and some of that economic data. We know we got some hot data yesterday. They kind of re-engaged some of the concerns that we could have lingering inflation and rates would stay higher for longer. So that's going to be something to keep a very close eye on, because if that's the case, that will trickle down to the consumer at some point and potentially put a dent in demand, which has been resilient for the most part.
I agree. Very well said. Thank you very much. Great content as usual. That's Oliver Slope from Blue Line Futures in Chicago. We'll bring it back here to Nashville.